Good afternoon. My name is Albert Essien, and I work for the EcoBank Group. I have quite an interesting composition of the panel. I have two from the buy side, and I have two from the sell side. So I have, I'm checking the list here. I have the governor for the Central Bank of Uganda on my immediate left, Emmanuel Tumusime Mutebele. I hope I got it right. Thank you very much. Then I have Bob Diamond, founder and director of Atlas Mara, the mover and shaker of Africa of late. He's the new kid on the block. Then I have Mr. Chris Newson. Mr. Chris Newson is the CEO of Standard Bank Group for Africa. Then finally, I have Dr. Michael Gondwe, the governor of the Central Bank of Zambia. So that's why I say we have two from the buy side and two from the sell side. The sell side being the regulators, and the buy side being the bankers, the commercial bankers in the room. We're going to talk about cross-border banking. Cross-border banking has been very topical, more so because of the bank that I work for, that is EcoBank. We are in 36 countries, operated in 34 commercially, and I guess we've been a handful for the regulators. On the positive side, it's also brought the regulators together. And the regulators these days, even the World Bank, they're thinking of how do we actually handle this new phenomena of cross-border banking. So without much ado, I would want to actually call on the panel of experts to start the conversation. And I would want to start from the buy side. So I would want to ask my friend Bob Diamond to lead the discussion, to tell us what he thinks about regulation, what he thinks about how to get things fast-tracked, how to bring very good practices on our continent, and again, how is he going to work with regulators, governments, to make sure that cross-border banking is handled properly and the downside risks is minimized. Of course, I also want to hear about lessons that he has actually learned since his foray into Africa. Bob.
Albert, thank you. That's a wonderful introduction, and thank you for chairing this panel. I'll start out with just what I think is an incredibly positive story, which is that the regulatory environment is working for the economy and for job creation. And I think that's apparent to me today. I think we thought about that before we formed Atlas Mara. We raised equity last December, 9 months ago. We announced the acquisition of Bank ABC at the end of March. So just over 6 months ago, we announced that acquisition. I will tell you that it was probably the most complex transaction I've ever been associated with. 40% of the shares were owned by a publicly listed German private equity fund with a bunch of hedge fund managers as investors. And there were banking operations in 5 countries with 5 regulators and a small position in a 6-country Nigeria. And yet, in 5 months, we had full regulatory clearance to reopen trading on the London Stock Exchange as an operating company, as a bank, with regulatory approval from Botswana, Zimbabwe, Zambia, thank you, Governor, Tanzania, and Mozambique. And I think what that made clear to me is it was very tough evaluation. It was a very tough process, but it was also clear that there is support from government and support from regulators for things that will enhance economic growth and the creation of jobs and investment, both of money in the private sector, but also people who bring operating skills. And that's what we hope we can bring in addition to money. I think the second thing I'd say on the more prospective is when I think about the opportunity in Africa and I think about the intersection of doing good and doing well. And I think about the opportunity for our investors and the opportunity for Africa, I keep coming back to small businesses. The impact on the economies and the impact on jobs of entrepreneur small businesses. And yet in the macro environment we're in, with many of the small domestic banks investing in treasury bills at very high yields in domestic currency rather than lend, with so many of the European institutions that have been over 50% of trade finance in most of sub-Saharan Africa for decades today, pulling their capital back to Europe because of Basel III, because of capital needs back home, with Chinese banks focused more on following their own customers. There's nothing wrong with that. For Chinese banks to expand internationally, the first rule of thumb should be to follow their customers, so they're lending to Chinese businesses, but not necessarily to domestic African businesses. So there is this huge void, and getting funding, getting capital, getting liquidity to small businesses. And I'll tell you another story just along the way. When we were doing our due diligence on Bank ABC, I was stunned at the first half 2013 financial numbers when I saw a 70% plus increase in net interest income. And the volume of business they were doing was fantastic. But in the second half of the year, they ran out of funding and they ran out of equity. And we see this in bank after bank after bank. So working with the central banks, working with the finance ministers around capital, liquidity, and funding, and the ready access of capital, liquidity, and funding to safe banks that are growing, and working with them on how the private sector and the public sector can work together to get more money to SMEs. Is it small business credit guarantees from the government that help foster this? Yes. But it also has to be banks that are ready, willing, and able to not just invest in domestic T-bills, but to really drive lending to consumers and drive lending to businesses. Knowing myself, I could go on for the next hour and a half, so I think I better stop, Albert, or no one else will have a chance to talk.
Good. Bob, you are so gracious. I was just beginning to enjoy your story, so we'll get back to you. So Bob has actually nailed the right thing: capital, liquidity, and funding. I mean, when you operate cross-border, they are very, very imperatives that you should keep your eyes on. And he will be working with regulators to make sure that there is adequate capital, liquidity, and funding, and also channeling actually these monies to the SME, who are the engine of growth, and not to put into T-bills. Let me flip straight to the sell side and ask the views of the Central Bank Governor of Uganda, Mr. Emmanuel Tumusimi Mutebele, what he thinks and what they are doing together with the private sector to enhance cross-border banking. Mr. Governor.
Thank you. Thank you, Chairman. Cross-border banks bring important benefits to local economies of African countries, especially expertise and, of course, capital. And they are also able to introduce into the domestic banking system innovative products and services that have been successfully pioneered elsewhere in the world and are new to our economies. In many African countries, including mine, cross-border banks are indispensable for the banking system. Hence, I strongly support cross-border banks getting licenses freely. Indeed, I support a system whereby there are no where there is freedom of entry of all banks, including cross-border banks. The full benefits of cross-border banking will not be realized unless the capital capital account is fully liberalized in both the home and host country of the cross-border bank, this is really necessary. For example, it is indispensable that the home regulator does not impose capital account restrictions on the operations of the cross-border banks. However, although the capital account should be liberalized, it is necessary still to impose prudential requirements on banks to curtail risks which might arise from cross-border operations, and prudential requirements include restrictions on exposures to foreign currency mismatches. I do not believe that to reduce barriers to entry, it is useful to offer a wide range of different banking licenses with varying capital requirements on the different categories of banks. This is likely to encourage regulatory arbitrage, where applicants for bank licenses look at packaging their operations in such a way as to benefit from the regulatory regime. As African banking markets become integrated with the global and regional banking systems, the harmonization of regulatory and supervisory policies will become increasingly important. The starting point for the harmonization should be the Basel capital accounts and the Basel core principles for effective banking supervision. Implementing minimum international regulatory standards is essential both to promote public confidence and to avoid regulatory arbitrage, as I have said above. In some respects, it is actually warranted for African bank regulators to impose more stringent regulations than the international agreed minimum standards, because banks on the continent face greater risks than banks in the industrialized countries. For example, central banks of the 5 East African community have agreed to implement the Basel III capital accords with an additional buffer of 4 percentage points of risk-weighted assets as a preventive measure. The effective supervision of cross-border banks can also be implemented on a consolidated basis, which requires full cooperation of all supervisors in the territories in which the cross-border banks operate. How a cross-border bank can be resolved in an orderly and equitable manner in the event that it suffers bank failure is one of the most challenging issues facing bank supervisors. The Financial Stability Board has formulated a set of 12 key attributes for effective resolution of for effective resolution of the regimes for financial institutions. I will not go into details about that, but that ends my brief.
Thank you very much, Mr. Governor. I think the governor has raised very pertinent issues, both on the bright side and also some caution, saying that Yes, cross-border banks should be encouraged. They bring innovation. There are benefits. They bring expertise, skills across the border. He thinks that capital should be allowed to flow, should be no restriction, and also they should be given licenses. However, he cautions that there should be stringent regulation. I mean, we have a bank in Uganda, so we know what he's talking about, and we are always dealing with that. But on the flip side, he was also the governor that gave us a license within a month. So I think he speaks and walks the talk. Now, on that score, I would want to move on to another sell side before I come to the buy side to conclude after hearing both sides of the coin. And Dr. Gondwe, let us hear what you think about cross-border banking. By the way, we are also in Zambia, and I know what it is to taste the Zambian soup too. So, Doc, over to you.
Yeah, thank you very much. Well, as the saying goes, Africa is open for business, and investors are flocking to Africa. And these investors include cross-border banks. And for us, that is very useful because we have liberalized economies which believe in the private sector as the engine of growth. Now, the private sector, in our case, would mean the SMEs, potential entrepreneurs trying to venture into business. And these are important in driving our economies. Now, the cross-border banks bring in experience from where they're coming to where they're setting up businesses. And for us, our vision is to provide a globally accepted best practice in the regulation and supervision of cross-border banking, which would enable growth of the sector without threatening the financial sector stability. We think that that then will be key to the confidence for the private sector to partner in whatever form to support cross-border banking. As regulators, of course, we are concerned with stability. Stability, not necessarily to threaten or stifle cross-border banking investments, but to provide further confidence to them, and also to the local market in which they're coming to do business, so that when they mobilize savings, there is that stability that continues to provide confidence in banks as vehicles for deposit taking, intermediation, and other areas that are required to grow the private sector. Both Mr. Diamond and Governor Mutavire have summarized the benefits of cross-border banking or just banking. So perhaps I may not need to get into these specifically, but you know, the cross-border banking, as I indicated, very key to us to grow the businesses. Key to grow financial inclusion, which is not as deep as it is elsewhere, particularly in the West. Key to bring about the processes of a liberalized economy, those processes that ensure that the entrepreneurs should be able to walk their dreams and implement their dreams in the form of businesses, and of course to work hard to ensure that those businesses survive. And as they survive, they provide a deepening of the market for the cross-border banking and other banks, and indeed provide stability for the growth of the economy. As Governor Mtebiri has indicated, therefore, the regulations are put together to make sure that there is that environment of stability, to ensure that the investors, at the end of the day, benefit from their investments. And of course, Mr. Diamond mentioned that they have invested in ABC Bank, and ABC Bank is also in Zambia. So among the 5 irrigators, we were involved. And we had to be innovative, not necessarily to follow what we do in licensing other banks, where we try to find and look behind and look at the promoters and find out their track records and so on, how long they've been in business. And we found that Mr. Diamond's business model was not falling into that category. But we were very happy to deal with his business model, and we were happy to license the bank, and we believe the bank is going to grow bigger and be able to benefit our economy. So maybe let me stop at that, other than perhaps continue to recite the benefits of cross-border banking that Governor Mtaviri has already ably articulated. Thank you.
Thank you very much, Dr. Gondwe. You realize that Africa is ready for business. Africa is rising. I have said that we should be risen. We should get to the end very quickly. But Africa is really ready for business. And as Dr. Gondwe says, cross-border banking is extremely important. It's useful. Especially it will work to get the private sector growing. And the private sector is the engine of growth. However, he also hammers stability. The fact that there should be proper regulation for confidence building because of what banks basically do. They are deposit takers. I think that I would want to move on and ask Chris his views. If he has a list of priorities in terms of how cross-border banking should take place or be regulated, what he thinks his wishes are with working with regulators and governments, what would he be putting forward? Chris has a bank in Zambia and also a bank in Uganda. So I hope he will pick his words very carefully. Chris Newsom.
And thankfully a bank in 18 other African countries. So I think the context of my comments is exactly that, in the sense that we, as an institution, are represented in 20 countries in sub-Saharan Africa, and therefore the need to understand the complexities of what's described as cross-border banking, which shouldn't be confused with trade or anything else, or transferability of money. It's defined around a multi-jurisdictional bank, and therefore brings to bear the concept that I think was raised a little earlier by one of the governors around this home and host environment. And when I talk and ask the question, what are some of my wishes? Well, the reality is that every single one of the 20 countries we operate in has a different regulatory environment. And it's not to say that the principles underpinning it aren't similar, particularly this question of stability, this question of the responsibilities of all the regulators to ensure that the financial sectors in all of these countries are stable, are sustainable, and also have the ability to be economically active and drive some of the economic activity is fundamental. The reality is, though, that they're all on a different stage of that journey and maturity in terms of development. If you go across all of the jurisdictions that we operate in, you will find that certain of the countries are still on Basel I. Some of the countries are on Basel 1.5. Some of the countries are moving very rapidly towards Basel III. And the congruency of all of those is something that one can never expect to happen overnight. It's not going to happen. So there will always be differences between all of those jurisdictions. But it's very interesting when you start thinking about what are the advantages of having a multi-jurisdictional bank in your particular country, or effectively managing or owning a multi-jurisdictional bank. And it starts coming to clients, it starts coming to efficiencies of cost. So if you are going to start benefiting from a client base, particularly more on the corporate side, where they themselves are multi-jurisdictional, and you're trying to follow those clients or help facilitate those clients getting involved in new countries and new businesses in different areas, the ability to start leveraging off that is sometimes inhibited or enabled by the particular country in which you're trying to get to, and the environment that it's particularly operating in. Secondly, the question of the role of banks in economies and countries, the question of the fact of penetration and the opportunity that exists, and the obligation, frankly, on all of us in the financial sector to keep deepening the penetration of banking into many of these countries. Also talks to the question of cost and the efficiency that one derives from banking and that one can derive. And all of that is around scale. And certainly one of the challenges I think we all have coming at us is trying to find the balance between the need for countries and regulators and governments to manage their particular border, their particular requirements in terms of in-country requirements, and try and juxtapose that with the ability to effectively scale and to leverage off experiences and infrastructure that are not necessarily within those borders. What do I mean by this? So a practical example. So where does a bank end up processing its transactions? Does it end up processing its transactions in 20 countries, for example? Or can it start thinking about a hubbing principle where it might have a particular hub in Nairobi, by way of example, and it does all of the East African transactions through that particular hub in Nairobi? The challenge to the regulators in many of these countries will then be, well, actually you're not processing, the data's not stored, the infrastructure and the IT expertise is not sitting necessarily within our borders. And how do we feel about that? What is the reaction we would have to that as a regulator? And our two gentlemen on my panel spend their lives trying to think about that challenge, and something which, as an operator, if you like, in those countries, is certainly something that I think we all have to really understand the challenge going forward in getting that balance right. But there has to be a balance, because ultimately otherwise the ability to keep driving down the cost of banking and the cost of doing transactions is something that we are all going to face very significantly. On a similar theme, I guess the other question of a much broader localization, I think again it links a little bit into the capital issues and the capital regimes that are different across all the different countries. But also the need to then ensure skills development, transferability of skills, ability to be mobile in the context of people being able to move between countries is something that is not always, if you like, the same if in different jurisdictions, and in some areas tougher than others. And again, the ability to have a facilitating environment around that, I think, makes a huge amount of sense, and something which we certainly would want to keep trying to articulate to our various stakeholders to try and get right, because I think there is an ability to learn from each other, and frankly, there's a need to learn from each other in what we do. I want to come back a little bit to the regulation, because in terms of an observation, and the first is that I think it's undoubted to me, if I reflect back over the last 5 years, the levels of interaction and information sharing and experience sharing amongst our regulators across the regions, so if you talk West Africa, East Africa, Southern and Central Africa, and across Africa per se, I think has increased enormously. And I really do think that's a very positive trend and something that certainly we as an institution hugely encourage. In fact, we sponsor at least an annual get-together of all central bankers in a particular jurisdiction to help with that process, because I think this whole host and home principle will be hugely facilitated when people understand where each other are heading and try and get to a point of congruency and information sharing across all of the governments and the regulators is very important. The last point I want to make, sorry, Albert, without taking up too much time, is a much broader point in terms of a kind of wish list, and that is that if I reflect on doing business in Africa, and I reflect on the challenges and often asked, why is it hard? Why are the margins bigger? All these sort of things. Actually, it comes down to one single point for me, and that is the need to establish strong institutions. If you think of the cost of lending, the cost of credit in many of the jurisdictions, a lot of that cost is attributable to the fact that there aren't good credit bureaus, by way of example. There isn't good data sharing. There isn't good information on consumer spending, etc. When you think of the challenges and the cost of trying to do some of the infrastructure projects that we spent much of today talking about, a huge amount of that is how do you execute on the opportunity, and how do these projects become going from the bankability stage to the execution stage. And all of that reduces the cost of borrowing, all of that reduces the cost of credit as we go forward. The sustainability of much of the growth that we are looking to help facilitate and looking to participate in is going to be subject to the establishment of really strong institutions. And we've got many examples where that is starting to happen. You've got many examples of where that's been a real success. And I think the key is to give momentum and further momentum to that. I'll stop there, Albert, if you don't mind.
Thank you very much, Chris. I think Chris, being one of us, when I say one of us, I also belong to the buy side, have actually spoken for us. He talks about congruence of regulation. Cross-border banking really means that we need to get the regulators on an even keel. Today, it's not the case, as he rightly points out. He talks about the need for strong institutions. I think I do share that, being an operator myself. He talks of scale, costs, and the fact that localization as opposed to having hubs, which is true, because the regulators sometimes we want to see the servers in their country. And we think that sometimes there's a way of processing that makes it cheaper. I think that we've heard the opening statements from all the four panelists, and it's time. I would want to give our audience more time to also be part of the discussion. So without much ado, I would want to open the floor. I've seen a hand up, so I don't know who controls the mic. Okay, Precious. So you mention your name, where you come from, and then your question. You could direct to the panel in total, or you could be specific. I can also take questions.
My name is Khalid Al-Aboudi. I'm the CEO of ICD, which is the private sector arm of the Islamic Development Bank. So naturally, my question would be about Islamic banking in Africa. Actually, Islamic bank in Africa is at a very, very early stage. It's only about 1% of the total Islamic banking. So there is a huge potential for Islamic bank in Africa. There is two sides of this. First of all, there is the side of the liquidity on the Islamic banking. So by allowing more Islamic banking regulation in the continent, allowing, establishing more banks over there, that liquidity can be actually made available. Second issue is about the real sector economy connection of Islamic banking. the fact that it's a banking that works with the real sector and, productive side. So I would like, the question for the two governors over here about their views about this and how do they see, and if there isn't potential, applicants for Islamic banks, their respective countries, whether this is something that they would, entertain. Just as another one small comments about the, another experience, which is the Moroccan banks experience. Maybe this is a different questions. Probably it would be nice in future session to see also how the expansion of Moroccan banks, and of course they are conventional, not Islamic, but from other side, because they are from within the continent, what are the lessons from this expansion, and what really they add to the economies of Africa? Of course, most of the expansion was in West Africa rather than South Africa. Thank you.
Thank you very much. Let's take one more question. Then I note that this goes to the governors, but if we could, okay, Ashley, we'll get back to you, please. Okay.
I promise you can have the next question. All right. My question, I'm Ashley Bendel from African Alliance in New York. My question is with regards to the consolidation of the banking sector across Africa. You talk about Basel I, Basel 1.5, capital requirements differing across every country. I'm interested in how you, some of you or all of you, see that unfolding over the next 5, 10, 15 years. Thank you.
Okay, good. Let's take the third one. Then.
Thank you very much. This is Harry Broadman from PricewaterhouseCoopers. I run the emerging markets business strategy consulting practice globally for the firm. I guess this question is directed to the supply side, if you will. Chris Newsom mentioned that standard helps, I'll put it in my words, facilitate information sharing among the central bank governors. I want to hear what the central bank governors from their side, what mechanisms are they using in order to facilitate, not necessarily congruency, because those are national policies, but what vehicles do they follow in order to share information more readily? Particularly the whole theme of this panel is about cross-border banking. I'd like to get a sense of that. Thank you.
Good, thank you. I think we have 3 or 4 questions on the floor. I think the issue with Moroccan banks will be noted. Perhaps for the organizers, for the next time, they could have something like that on, amongst others, to share it. But I would want to go to the governors specifically to speak to the issue of Islamic banking in Africa. Emmanuel, would you want to take that first?
Well, I don't think it's surprising, but we don't have much experience with Islamic banking. Although in Uganda we have just gone to Parliament with a proposal to legalize Islamic banking. We have been studying carefully the benefits of this banking system. We believe that that this banking system will help to improve financial inclusion, and we hope that we can have the first Islamic banks very soon in the new year. Other than that, I don't think I can add much really, because we are just studying the system.
Thank you, Manuel. Dr. Gondwe.
Yes. I think Islamic banking is a reality globally. It's not something that one can just push aside. In my previous job, I participated in setting up the first Islamic bank in Kenya, together with investors from Dubai and other parts of the Middle East. That bank is now doing well. But for me, as I returned home to be a regulator, it was also a lesson that before perhaps we set up an Islamic bank, we also need to ensure that we are ready so that the Islamic banking is stable and strong. An Islamic bank is not without its own challenges. And in fact, it learns from the conventional banking in terms of trying to avoid some of the mistakes that perhaps would erode confidence. About a month or so ago, I was a guest of Governor Zeti in Malaysia at the Global Islamic Summit. And the idea was, again, to deepen learning, our learning, so that we, by the time we do start the products in Zambia, we are strong. Now, to cut the story short, what we believe will start is to get the current banks that are already operational to open Islamic Sharia compliant windows. And from there, because most of these banks are the global banks like Mr. Nison's bank are already doing it in their other markets. I know as a fact, I think they have opened Islamic bank windows in Kenya, so they could bring that experience, and we as regulators can also work with them. And that then will culminate in the setting up of Islamic banks from the scratch. And so that's the process that we are looking at.
Sorry. Thank you very much, Dr. Gondwe. I think on the second question, I would want each of the panel members to comment on that. And that is on the question of consolidation of the banking sector in Africa. Looking at 5-10 years horizon, what do we think, or do you think would be the features and what will happen? I will start with Mr. Bob Diamond on this. On his
Thank you, Albert. But I want to say I want to hear from you with the recent investment in EcoBank from the Qatar National Bank on the issue of Islamic banking as well. So you're not going to get off the hook here. Actually, I think it was an interesting question about consolidation, Basel III. Where are we in this? I think if I can take a kind of a very high-level answer to that, I think the current environment for the big banks in the U.S., in the U.K., in Europe is very challenging. I don't think it's just about regulation or Basel III. I think it's political in many ways. I think there's an unwillingness of the leaders in those countries to come to grips with too big to fail, too complex to manage. So there will be limitations on the big banks' ability to grow, combined with a real call for capital and return on equity in their core businesses. And so I think it changes the landscape dramatically in terms of consolidation. And for the last 20 or 30 years, consolidation in financial services meant big banks buying non-big banks. And I don't think that's going to be the case right now. So I think Qatar National Bank investing in EcoBank is very interesting. I don't think we would have seen something like that a few years ago. And I think there is an opportunity for a very different kind of consolidation to happen in cross-border banking, which is not dominated by the big banks in the U.S. and the big banks in the U.K. and Europe. And I think that is a phenomenal window and a phenomenal opportunity. It's the genesis of the creation of Atlas Merchant Capital and then what we're doing in Atlas Mara. And so I think for the regulators, for the two governors, I think there is a real opportunity to take a balanced view and learn real good lessons from the last 4 or 5 years, and importantly, the next 4 or 5 years about how Basel III and regulation plays out in those economies. And in the meantime, I think it creates opportunities that wouldn't have been here before. In terms of Harry's question on technology, I think that's in information, I guess, is really what you said. We're looking at technology, specifically Rapture technology, to implement in some of our activities. And I think Talking with Doug Manazzi, the CEO of Bank ABC, and other people in the banks where we're hoping to close in the next period of time. There is a lack of an intelligent layer of technology which isn't very complex in the age of cloud, in the age of big data, that can improve the quality of information. And when we have cross-border banking, we're going to have cross-border risks. We will have industrial companies also and corporate clients operating in 4 or 5 jurisdictions. We have it today. And as a banker, we need to know what is our currency risk associated with that to the second. And we need to know when someone says XYZ company wants to do a loan in Tanzania, we need to know very quickly how much credit exposure do we have for them across Africa and across the world, because this consolidation is happening with our clients as well. So the thing we talk about internally, and it's really driving our technology plan, our internal technology plan, is increasingly in banking in Africa, speed is a virtue. And the person who has, or the bank that has the most accurate information the most quickly is going to have a huge competitive advantage in doing business with their customers and clients. Lastly, Governor, I just want to say I'm a competitive guy. I'm the only banker on this panel without a bank in Uganda. I have a partner who's a 4th generation Ugandan and his family lives on a top of a hill in Kampala. We'll be visiting you very soon.
Well, I think AI should take cue from Bob Diamond and charge him for this advertisement. On that note, very unfortunately, I've been hinted that we've hit the wall with time. It always happens that way. I think I should tell the organizers that the next time I chair, they should be more gracious with time. Okay? So I would have to, unfortunately, bring this very interesting discussion to a close. But since we are all around, let's continue to engage. Cross-border banking has come to stay. It's a very useful mechanism. It is good to spread expertise. It's good to make sure that capital flows, skill flows, innovation. However, we should think of the downside and make sure that we also have strong institutions and regulators to make sure that we stay the straight and narrow way. And on that note, I would want to thank all of you. Thanks to the panel, to Governor Charles, to Bob, to Chris, and to Dr. Gondwe. Thank you very much. It's very refreshing to have my regulators and my competitors and collaborators with me here. Thank you, and have a nice day.
Doing business in Africa. You can't afford to be without Africa Investor.